And there's no doubt that the mortgage distress and lack of social housing are together some of the most pressing issues facing our state today. The debate around the Croke Park renegotiation, for example, many could argue resolves around these issues also. Many frontline workers in those areas were afforded mortgages on the basis of their pay and their allowances. And we hope that their pay may not be disproportionately affected by any proposals emanating from government. Many of these people are no longer able to afford the mortgages they possess. Yet they hear of no real solutions by government. What they do hear of is the continuation of the property tax. They do hear of further cuts to their children's allowance, prolonged delays in allocation of medical cards and education grants, and they face charges for waters that hasn't yet been made fit for practice. But they had, prior to the election, been assured of a softer way, an easier way, and the immediate overhauling of the promissory note deal and retrospective capitalisation of our banks. Choices and decisions of government, it was said, would be more progressive, yet it has been far more regressive than progressive, I'm afraid. It hasn't been the case for 2 years now. And while the promissory note deal, as Eamon Dunphy might say, might be described as a good deal, but not a great deal, it does afford a new opportunity, it does afford a new start, and the potential for some social dividend. And this could start, even at this late stage, with addressing concrete issues which in turn address the mortgage crisis, rather than more rhetoric, rather than more cabinet subcommittees, rather than talk of special focus. Because to date, we've seen no definitive action in the area of split mortgage schemes. We've seen the decimation of mortgage interest relief. We've seen in the proposed insolvency bill, the veto for resolutions, whether devised in conjunction and negotiated by an independent assessment, but still the veto remains and retained by the bank. And finally, what we've seen in response to a question I put down to the Minister last week, failure to adequately promote or implement the mortgage to let scheme. Taking both residential and buy-to-let mortgages as of September last year, 167,000 mortgage accounts are in arrears out of a total of 911,000. A further 51,000 have been restructured. So 23% of all mortgages are not being paid in accordance with their original terms. This is both a social and economic crisis. And this data shows how little progress has been made with dealing with this crisis. As I said, the personal insolvency bill is untested and is difficult to predict whether or not it will be of benefit to homeowners given the veto the banks have over any proposed settlement. The fact that 20,000 residential mortgages are in arrears of over 2 years is a shocking indictment of the government's response to date. There appears to be little or no prospect of these mortgages ever being paid in line with their original terms. And despite last week's news in the promissory note, the banks are still reliant on the state for funding and won't get outside investors to invest unless the mortgage crisis begins to resolve itself. And at that point, the recapitalised banks may be able to lend with relatively clean balance sheets, and the issues around credit for businesses and households may resolve themselves. The other sector, that being the buy-to-let sector, represents a time bomb for the economy too. 17.9% of buy-to-let accounts are in arrears of more than 90 days as of September 2012. In relation to the mortgage to rent scheme that I mentioned, and particularly in response to the question put to Minister Janet Sullivan last week, 8 months on from the launch of that scheme, 8 homes have been through the mortgage to rent scheme service, with only 2 of those transactions completed so far. This is from an initial application of 708. The ongoing failure of the scheme exposes the complete inadequacy in tackling this crisis. The scheme has even been subject to judicial criticism for, I quote, giving false hope to some struggling homeowners. Mr O'Sullivan said the scheme will help more than 100 families in 2012 and could be eventually geared up to help several thousand. She and her officials emphasised the humane aspect of the scheme in that families will not leave their own homes. So the prediction of 100 families in 2012 is in tatters. The fact that it could be geared up to help several thousand is in further tatters. And questions need to be asked, have been asked, and answers need to emanate from government as to the failure of that particular scheme, as to the failure to address and give reasons as to its failure. Out of the 708 applications, 300 were ruled out immediately, and I understand there has to be a 3-month period before any such deal can emanate. But to think that it has succeeded in 2 cases since last June, together with, as I said earlier, in relation to being no specifics in relation to split mortgages, the veto remaining with banks, decimation of the mortgage relief, interest relief. That doesn't bode well for dealing with this crisis. But as I said, by virtue of the social dividend that is supposedly to emanate from the deal last week, can we see and expect progress in this matter into the future? In relation to social housing, the government has cut spending on housing by 19% to 585 million, leaving local authorities and their housing sectors desperately underfunded, resulting in close to 100,000 households on waiting lists for local authority housing across the state. And NAMA has advised that it has identified roughly 3,900 residential properties controlled by its debtors and receivers as being available for social housing provision. To date, demand has been confirmed by the local authorities for over 1,500 of these properties that NAMA has made available. Another 800 are being evaluated, bringing the overall total that may be deemed suitable to slightly over 2,300. The NAMA is mandated to provide a social dividend, yet only 203 units have so far been provided for housing. And this is despite the fact that Minister Hogan spoke about 2,000 homes being provided in 2012 for people on social housing waiting lists. So 203, and I happen the figures for what it was in 2012, is 203 since NAMA came into effect. So we'll be generous and call it 50%. That's 100. Allied to the 2 cases we mentioned in the mortgage to rent scheme. That's the sort of success that's been achieved in this area. Where is the 1,800 plus houses that have been promised by the government from NAMA portfolio that have yet to be delivered? NAMA has made the properties available. Local authorities have identified them. But government has not acted. In summary, the government has failed to confront the immense scale of the mortgage crisis facing the country. And promissory note deals will mean nothing to ordinary homeowners if the financially devastating impact of the mortgage arrears crisis is allowed to rage on. The disaster of the mortgage to let scheme exposes the ineffectual response of the government to date. And while social housing waiting lists have ossified with the failure to utilise NAMA properties, it's time now for this government to eventually, at this late stage, to get to grips with what is a spiralling crisis.